Do you struggle to sleep at night? Perhaps it's because your partner needs something to combat their snoring problem. Are you confused about which supplements you should be taking? Do you want to find the right kind of exercise equipment for your home? Or maybe you're just looking for the best electric shaver. Which has hundreds of product reviews to keep you fit, eat well, sleep better, and everything in between. Just head to which.co.uk/health to read our expert insight and independent reviews. Get expert advice and recommendations to live your best life every day with Which.
With several cuts to the base rate since last summer, what's the latest on mortgage rates and how quickly might they fall? Welcome to Which Money. Hello, I'm Lucia Ariano, and with me today I have Sam Wilson, mortgage expert at Which.
Hi, good afternoon.
Good afternoon. And we also have David Hollingworth, Associate Director of L&C Mortgages. Hello, David.
Hi there.
Okay, shall we start then with the base rate decision which happened just last week? Sam, do you want to start us off here?
Yeah, of course. So last Thursday there was another base rate decision and the base rate was held at 4%. It's been there since August, but it was a close call. So it was 5 votes to 4, which suggests that the next meeting, which will be held quite close to Christmas on the 18th of December, we could possibly see the base rate cut.
And David, was this something you expected, and did you think it would be such a close call between the 5 who voted to hold and the 4 who voted to cut?
Yeah, so it's really interesting because if you look back over the last few meetings, you'll see quite different voting patterns. And I think the market generally was expecting it to hold, which is what came to pass. But of course, it was a lot tighter than perhaps we would have thought even just 2-3 months ago. Really, the kind of data that's been coming through has just opened the door to that base rate cut coming sooner than markets had kind of given up on that cut coming even this year potentially. So suddenly all things look go and we could be seeing another base rate cut before the end of the year.
Well, just before we talk a little bit more about what we might see looking ahead, can we just recap on the link between the base rate and inflation and interest rates?
Yeah, so I mean, the Bank of England are really focused on the rate of inflation and they've got a target rate of 2%. So we're still way above that, but that is what they are primarily focused on. And inflation data has just been slightly more positive than had been previously expected. And that data coming in better than expected shifts market focus and opens the door, as I say, to a potential base rate cut coming sooner. So it's not that the commentary around will base rate drop, that's been expected for a long time now. And the bank's been really consistent in its approach to that, saying they expect a gradual downward path. But they're holding firm, wanting to see that inflation is coming down in a sustainable way and will continue to fall, but will be under control effectively. So that's what they're really focused on. And they don't want to cut too soon in case they just stoke up inflation further. But the minutes now have actually pointed to the fact that they're expecting that CPI is now peaked. So that is lower than was previously anticipated, which is positive news.
So it sounds like then experts are largely expecting a cut this year, or are we waiting until what happens in the budget?
Yeah, I mean, there's plenty can happen. So as quickly as we're saying we've opened the door to another cut this year, of course, something could come out which will actually change that opinion. We've got some more inflation data, the budget yet to come. So I think there are things that can change, but certainly it's looking more likely than it was even a couple of months ago. It could hold again, but I think there's a lot more expectation that we'll have the opportunity to see base rate cuts. And we've had unemployment figures are up, wage growth is down. That should only add into that narrative.
And I should mention while we're on this that we will, as we always do, have a special budget podcast which will air on Budget Day itself on the 26th of November. So Sam, can we hear from you then? What's been happening? What's the general landscape been like for mortgage rates over the last few weeks, few months?
Yeah, of course. So in September, we actually saw a slight creep up with some mortgage rates. And then coming into October, we saw some slight rises, some slight reductions, but there wasn't much change. But in the last few weeks, we've seen some of the major lenders reduce their rates. So we're talking Lloyds, Halifax, Nationwide, also other lenders like TSB, the Co-op, Principality. So there's a lot of movement in the market now for rates to be dropped. And we often see this where the biggest lenders move first and then smaller lenders will follow. And in this case, that is what is happening. So currently, the rate reductions are between kind of 0.2 of a percentage point and 0.1 of a percentage point. So we're not talking massive rate cuts, but it's a positive news for borrowers, especially those who are looking to remortgage, that once again, rates are starting to go down.
Yeah, absolutely. So all that change in market expectation has really fed through into mortgage rates. So although borrowers might have been a little bit disappointed not to see base rate cuts at the last meeting, actually, when you look at mortgage rates, activity has been high there, and all the major lenders have now been making at least one cut, and in many cases more than one. So that's positive news for borrowers looking for fixed rate mortgages. Those who are hoping to see something movement on variable rate will have to wait, of course, because those will move in reaction to a base rate decision. But that market expectation of more likelihood of a base rate cut coming sooner has opened the door to cutting the costs for lenders. And it's so competitive in the market that lenders are actually passing that through to borrowers in their fixed rate products very, very quickly.
Well, it is very nice to hear some positive news for mortgage holders. Sam, I know you're looking at rates every day. Can you give us an idea of the kinds of rates people might be looking to get at the moment?
Yes, certainly. So for people with lower loan to value ratios, so this is kind of 60, 70%, 80%, you'll find rates that are typically, the best rates are typically below 4%. They'll slightly move on day to day, as we talked about. Lenders do readjust their rates, and then new lenders will have the best rate on the market. And that's why here at Which we have automated our best rates tables to make sure that they're updated twice every day with the best rate, so that when you go and try and find the best rate for your specific circumstance, so we have them for home movers, we have them for those remortgaging, and also for first time buyers, you can be confident that that's actually the best rate on the market for that day.
And we'll get a link to that in the description of today's show. And are there any certain banking groups then that are leading the way here, would you say?
Yeah, so in our recent analysis that we do every year of interest rates, we often find that the biggest banks actually offer the best rates, which is quite funny, as previously I've also done analysis for the savings, and we certainly do not find that. So it's interesting that when it comes to mortgages, the biggest banks often do very well. So Santander has scored very highly for us this year, as have Barclays and Nationwide as well.
It is interesting to hear the household names coming up. And another thing I found really interesting reading one of your recent articles, Sam, is that some banks actually offer better deals for existing customers. Which banks are doing this?
Yeah, so recently what we've done is we've asked the biggest 15 lenders whether they offer better rates for existing borrowers when they come to remortgage, or for people who have a bank account with that lender. So we found that Barclays, they will offer lower rates for existing borrowers. Depending on your individual circumstance, the discount will vary, but they have said that they will offer you a discount. And then a host of other lenders have also said that they will either offer you the same rate as a new customer or a lower rate. So there's quite a few. Accord Mortgages will sometimes offer you a better rate if you're an existing borrower. And Principality Building Society told us that existing borrowers typically get a better deal. If you're thinking, I've got a current account with this lender, will this maybe get me a better deal? Generally, no. However, if you are a Club Lloyds customer, you will get a 0.1 percentage point discount. And out of the 15 major lenders that we surveyed, this was kind of the only deal that we found. So Premier Banking customers can also get this type of deal at Barclays and HSBC and Lloyds. But to be a Premier Banking customer, you have to be doing quite well. So you need to either have an income of £75,000 a year, or for some lenders it will be £100,000 a year, or have £100,000 in investments and savings. So that's not going to be an option for many people out there.
Arguably kind of rewarding the wealthy, I suppose.
Yes, no, definitely.
But good to hear that loyalty is being rewarded, something we do like to see. But David, would you say, generally speaking, that you should be encouraged to shop around, to not stick with one bank necessarily?
It's really good that lenders are now much more proactive in what they're offering to customers. So, if we go back far enough, it would have been pretty much standard variable rate or nothing. I can remember those days. But now lenders are offering deals which are much more close to the deals they're offering new customers, or potentially even a little bit better, as Sam says. So the thing that you've got to bear in mind now is that your lender may not be the best lender at that time in the market. And the best buy deals will change as lenders' appetite changes. So, you've got to ask two questions. Are they offering me the same as they would a new customer or better? But secondly, you need to also ask yourself, am I getting the very best rate in the market? And that's why, even when you're coming to the end of a deal, you might see something that looks okay, but it's worth just checking that is going to be the best across the market. And some people don't realize that advisors will be able to look at the existing lender deals and help you with those, as well as looking across the rest of the market. So that will at least give you the peace of mind that you're getting the very best rate, even if it is the case that you end up staying with your current lender.
Just quickly to touch on the types of mortgages that are available, whether you fix or you move to a tracker or you're on the variable. I mean, what's your advice generally for people who are coming to the end of a deal or getting a deal for the first time? Would you recommend fixing, or given rates are due to fall, what's your advice here?
Yeah, it's going to be an interesting time, I think. But at the moment, we're seeing most people still going for fixed rate. So you mentioned first-time buyer, potentially. They will typically prefer the security that a fixed rate gives them. But even those who are coming to the end of a deal and looking to switch to a new product, they will often be going for fixed rates as well, we're seeing at the moment. Over time, we might start to see that change. So if that base rate reduction feeds through, whether it's December or whether it's into next year, as we see rates coming down, we might see more borrowers just considering whether a tracker rate might suit them better. At the moment, the rates are still that little bit higher than you can get on a fixed rate, but of course they will drop in line with base rate. And the other benefit that they can give borrowers is that they are much more available without any kind of penalty. So early repayment charges will typically apply during a fixed rate period, but you can find tracker rates which will have no early repayment charge. So that gives you some more flexibility, if you like, and those who are looking to make more significant overpayments may well like that. But I think we'll see that as base rate continues to edge downwards, potentially more people looking at variable. For now, it all seems about fixed rates still.
At the end of the show, I do want to touch on the Renters' Rights Act just very quickly while we have our housing experts with us. But just to stay on this for a moment, is there anything that you'd add to that, Sam? I know that which recommended providers haven't yet come up.
Yes, so we recently redid our annual analysis. For this year, we only have one which recommended provider nationwide. And this isn't surprising. They often do very, very well. This year, they had their Fairer Share award go again out to customers that were eligible. So what this award is it essentially profit shares and gives customers, this year it was £100 if they'd been with them since, I think it was March the previous year. So we know that people obviously love getting the free £100 and they also have an excellent service. So they came joint top of our customer score table with Principality Building Society and Skipton Building Society. But the thing that made them the only which recommended provider was they backed up a great result in our survey with excellent interest rates. So Skipton Building Society and Principality Building Society didn't quite make the cut, but Nationwide proved that they not only offer a great customer experience, but also offer really, really good rates.
And I should say again, we'll put a link in the show notes where you can read all of our provider reviews. Now, just quickly then, I did want to mention the Renters' Rights Act. It's a brand new law that aims to protect renters. Sam, What do we know so far?
Well, I think the most important thing to say first is, although the bill is now an act and it has gone through Parliament, nothing has changed yet. And it will take time for the government to set out how it's going to implement all of the different provisions that are in the bill. And it will also take varying amounts of times for the different provisions to come into place. So this has been talked about as one of the biggest pieces of legislation for renters, for tenants and for landlords for many, many years. But currently nothing's changing, and it's only over the coming weeks that we'll kind of learn how this bill is going to be implemented. But there's going to be big changes. So when they do implement the different provisions in the bill, we will see that you won't be able to bid anymore for flats. I've got plenty of friends who they come to the end of their tenancy and they look for houses, and it's the classic thing of, I've got this budget, you go and view a property, you put in the asking price, oh no, someone else has gone 10% over or possibly even more. So that's one of the provisions that will come into play. It may cause rents to go up, but the argument is that tenants would then at least know what they are going to have to pay. But that's all to come. We don't know what will happen there. There are other provisions as well in the bill. So Section 21 evictions will be scrapped. So those are the types of evictions where the landlord doesn't need to give a reason for it. And then there are a host of other parts of the bill that will look to improve the energy ratings of properties and the conditions of properties that are being let. But again, for some of these provisions, especially ones where we're improving the quality of the housing stock, that will take time because the government has really tried to emphasise that they understand that these are big changes, and with these big changes, landlords will need time to make the home improvements that will mean that these properties are fit to rent under the new provisions in the bill.
So I think what we'll be looking to see is what impact this has on existing landlords, and they've had what they feel is a tough time of it. There's been a lot of changes in the buy-to-let market in recent years. Lending conditions have been tougher from a criteria perspective. Obviously, interest rates have gone up, which affects landlords just as it does homeowners. And I think there's a sense of, will these additional provisions cause some landlords to perhaps think about whether it's time for them to exit? We don't know if that will be on a big scale at all. And of course, these changes have been well highlighted. They've been coming down the track for some time. So actually, we may see less impact than some have suggested. But that will be the thing that we'll be looking out for. How does it affect the appetite of landlords to add stock? Because we do need a private rented sector that is functioning well. That's for sure. And of course, this act is more about making that a better, more professional market for everyone.
Well, it's a topic we'll have to come back to and in more detail. But for now, thank you both so much for joining us today. Thank you very much.
Thank you.
Thanks.
Thanks for listening to this podcast from Which, the UK's consumer champion. You can find plenty more advice about what we discussed today in the show notes. There you'll also find a link to become a Which member for 50% off the usual price, an offer exclusively available to you, our podcast listeners. Joining Which will not only give you access to our product reviews, our app, one-to-one personalised buying advice, and every issue of Which magazine across the year, but you'll also be helping us to make life simpler, fairer and safer for everyone. Don't forget to hit subscribe wherever you're listening. That way you'll be notified whenever we release a new episode of Which Money, Which Shorts, or any other podcast that we make for you. And if you want to get in touch with us, then follow us on social media at Which UK or drop us an email to podcast@which.co.uk. See you next time.
If you're enjoying this podcast from us here at Which, then why not become a Which member? Right now, we've got a special offer, especially for podcast listeners, meaning you can choose any of our 3 membership tiers for 50% off the usual price. Starting at just £39.50 for a full year, you can get Which magazine delivered direct to your door. For the same price, you could also choose a digital Which subscription, giving you access to all of our product reviews, the Which app, and the digital edition of Which magazine. What's more, you'll also be able to use the Ask Which service for personalised one-to-one buying advice. Or why not get a full access Which subscription for just £49.50 for a full year? Don't forget, that's 50% off the usual price. To join Which or to find out more, just head to which.co.uk/podcast offer. That's which.co.uk/podcast offer, or click the link in the description for today's podcast for 50% off a Which annual subscription.